morning, everybody. It is February 28th, 8:25 a.m. Hope everybody's having a good morning. Let's look at the watch list. Let's see what's going on here. Crude. Crude's exploding to the upside, up 2.34%. Some news on Saudi's going to raise the prices. What's propelling the market higher? And I'll show you later, like the importance of having many most traded price, most VPOCs together lined up just makes a big move happen. So we'll look at that. I've seen this, I've shown this before, but if anybody's new, I can show you that as well. Let's see, 10-year yield is up 0.69. What recently just came out was a tweet from, I believe it's Jamie Dimon or Solomon from Goldman Sachs. I think it's Solomon from Goldman Sachs said that the inflation is going to be stickier than thought. It's probably not, probably sending the markets down a little bit right now. But besides that, let's get over to Bitcoin. Bitcoin's up just slightly, 0.41. The Dow's up 0.26. The ES is up 0.25. Russell up 0.24. Nasdaq up 0.21. Dollars flat. Bonds, 30-year bonds being sold, and we got gold down. Then the VIX is slightly down. All right, let's go to some leaders and laggards. We got Tesla. Tesla is up 1.78%. I did see some negative news on Tesla that they just missed some sales numbers, but it doesn't matter. Tesla is definitely on a little bit of a run. Coin up 1.09%. All right. And then we have any laggards to speak of. I just saw Apple has some kind of lawsuit pending. I forget what it was about, but some negative news on Apple. BABA's down 1.06. No surprise, that always gaps up and gaps down. Let's see here. Chevron's up. Oil's up, but also they mentioned some buybacks. Along with we got Exxon. Probably simply play with Chevron. And then we have any laggard to speak of? Not really. Sectors, energy, no surprise, up 1.06%. And really no negative sectors as of yet. Okay. Some news that came out. Target beat earnings but had very bad guidance. So that was that for that. Let's look at what's on the docket for today. At 8:30, we got good trades balance, retail inventories, and then we have 9 o'clock S&P. That's not really Chicago PMI. I would watch that at 9:45. Consumer confidence at 10 a.m. Then we have API weekly crude at 4:30, which isn't really important to anybody really watching this, unless you trade crude after hours. So that's what we have. Not a big news thing today. However, I did want to show a couple things here really quickly on what's going on in the market, and what has changed. Okay, so let me bring this over to. That's the Fed's balance sheet. We don't need to know that. We know they're tightening. This is the I just wanted to show this. This is inflation, and this is giving me a pain here. Hold on a second. Apologize for that. Let me get this right, guys. Give me 1 second. Give me 1 second. There we go. So this is the Fed's 5-year break-even inflation rate. Just want to show you. This was down at 2.26. You can see it's rising. Okay, which we know from the numbers, but I'm just showing you. That's a chart you can kind of look at. It's a pretty cool chart to look at. here. You can see the 5-year break-even inflation rate. So we kind of bottomed out here, and you can see the trajectory, right? We kind of peaked maybe over here, and now we bottom, but now we're starting to make lower highs. So no surprise there. But this is really what I wanted to show everybody was this over here. Right here. Okay, so if we look at this diagram, okay, this is very important. This is the Fed Fund futures. Okay, good morning, Rosita. And this is the Fed Fund futures. So check this out. Okay, now how to look at this. This is the current rate. So just call it. You want to call it 4.5, 4.75. We'll call it 4.5. Okay. So this just says what the Fed Fund futures are projecting, probabilities. Okay. This is very important because they were predicting like a pause or maybe even a pivot to stop cutting, right? So now check this out. So the next FOMC is on March 22nd. Okay. They're predicting a 75.3% that we're going to hike 25 basis points. Okay, a quarter of a point. But now there's a of chance of 50 basis points, a half a point, 25%, right? So that's baked. That's a lot different, right? This usually would be at like 100%. Well, inflation's stickier. Feds are being more hawkish in their speaking. Now, the next meeting, they're also expecting a 25, but also a 50 in play, right? But this is the more important part. If you look down here, right? If you look at this number, this is real important when it says hike. It just means, are we going to be cutting back, easing, or hiking? Now look at this. As the FOMC goes on, 100% chance of a hike, 100% chance of a hike, 100% chance of a hike, 100% chance of a hike. Now we're back. Now we're into September. 100% chance of a hike. All the way in November, 100% chance of a hike. All the way through the end of the year, 99% chance of a hike. What does that mean? That means that this Fed is, no one's expecting this Fed to pause or pivot. Now, that's why the title of a little bit of my card in the front of my YouTube video was I have bearish bias for now. Why? Because you don't fight the Fed. Okay, you don't fight the Fed, and the inflation's becoming stickier. Okay, this is not something that's just going to keep going down like it was. We all see it in the numbers. So this is just something you got to keep in mind. A macro long-term view, Fed Fund futures are not projecting any kind of pause or cut. Okay? And remember, whenever the Fed is raising rates, there's a big lag, sometimes almost 6 months, before you see what the hikes have done. So some people think we're tightening too much, too fast, but that's what we're doing. Just to keep in mind, Powell has said he'd rather over tighten and break something, basically. He didn't say that, but basically what he's saying is like, I'll over tighten and even break it, then pause or cut first, and then inflation comes back even stronger. Okay, he doesn't want to do what Volcker had to do in the 70s, where they thought they got it under control, they started to ease, and then it came back with a vengeance, and then it causes more problems. So that's what we're looking at right now. All right, I just wanted to bring that up. Hope that makes sense to everybody. That is basically the landscape that's changed. People were looking for soft landings. People were looking for all this in the beginning of the year. Well, now the Fed Fund futures is not pricing that in. Can stuff change? It can always change. But as of late, nothing good has been coming out of news. All right. Hope everybody got something out of that. Just wanted to put that on there. We also have earnings. Target obviously came out. Zoom, AMC, big ones coming up. Neo, Snow. I talked about this already. Just have this on the radar. All right. All right. Let's get into charts. All right. Let's look at what's going on here, right? Oh, just to mention too, I didn't mention it, but Spain, I believe, in France just had higher than expected inflation numbers too. So in the eurozone. So okay. So SPY. What do we got here? Right, we dipped down, hit the 200-day moving average, and what did we do yesterday? We opened here, went up, closed down here, right on this old trend line, and we had support of the 50-day moving average yesterday. Okay, acting as resistance right now is this anchor VWAP from the all-time highs. This anchor VWAPs from the all-time highs. Okay, what do we have below us? We have those October lows, anchored VWAP right here, the yellow dots. So far, we haven't tested that yet. And these are apps. These aren't just like moving averages. This is from volume weighted average price. So this is the average buyer from those lows. This is the average seller from the all-time highs. Institutions use these anchored VWAPs. Okay. So the white ones from the FOMC low over here. So right now, the average buyer from this FOMC low is underwater. Okay. That's how you read these. So they're just not like a moving average. They're actually, there's data behind them. Okay, so this is what we're looking at here in the SPY. In a range, all right, we kind of know where we are. The Qs popped off that 200-day moving average, like I said, on Friday. Yesterday, same thing. We moved up, hit the 9 EMA daily, right? And then we closed down here by this key level 293.47, which has been key. You could see it's been support, and it was resistance over here. Okay, that level is just a very key level, 293.47, and we're kind of in this range right now. Okay, so that's what's going on in the Qs. Let's look at the triple headed monster. What do we got going here? So I'm seeing some large orders. I'm getting some notifications that there's some large orders coming in. It's probably crude, I would guess. It just goes off of my headphones, so you guys might even hear them. Okay, here we are. 10-year yields 3.94. Okay, this is queuing up probably for a breakout to the upside. We do that, market's going to go down. Remember, bonds are smart money. Okay, keep an eye on this. I would say we move over into the 4% territory, and we're going to probably try to touch this 4.2 yields. Okay, inverse, everybody got to remember that's the bonds, right? So bonds are getting shorted. There's bonds going down, right? People are selling, and the yield curve is inverting, even steeper. Okay, I myself have been buying T-bills. I'm been using a T-bill ladder, and of course, I'm not no financial advisor. I'm just saying what I've been doing. But T-bills have. I just got a 6-month T-bill for 5%. It's crazy. It's really insane. Okay, so that's the TNX. So let's look at the VIX. Now the VIX obviously made a high here on this day. That was what, 23.63, right? We come off that a little bit. We have now some support at 20.68 about. Okay, so right here, anything over 22, back in the 23 land, probably going to start moving lower. But we have to see, right? Let's look at that dollar. Dollar kind of hit this resistance of 105.32. It's kind of pulled back now to this 104.64 and this trend line right here. Have to really watch the dollar, see what happens with that. All right, the higher the dollar moves, the worse off for equities and commodities. Okay, we have to watch that. Really quickly, we can take a look at the at the Dow. You can see Dow was in a huge range, and it broke this support, and now kind of at the 100-day moving average here. Okay, remember the largest holding in the Dow is United Healthcare. Okay, remember it's only 30 stocks that move the Dow. And let's just look at the Russell really quickly. Russell's like the small caps, so you know, kind of in this little range in the Dow. Okay, all right. Let's go over to our good old market profile and the futures. Okay. All right. Let's just go over what we did yesterday, and then I'm going to go over certain levels, right? Okay. So, what do we have here? And what I talk about yesterday? What I talk about yesterday, right? Even though we went up to here and we kind of went over these levels, we went over the most traded price of the week. We went over the most traded price of this year. But little do you know what's happening now. People are selling the rips now. Okay, it's kind of flipped a little bit. It's not no longer buying the dips. It's kind of selling the rips. All right. So I had a nice trade, a nice short. So that's why I said this area. Remember I talked about it. I said this is a huge chop zone yesterday. I said that right in the pre-market video. Whoever watched it, I said in this area we're going to do this. I don't expect this or much of this yet, but we're queuing up like a spring. All right, we're building energy again. We're building energy again. What does that mean? That just means it's like a spring coiling up for a big move, lower or higher. Okay, I would lean towards lower, but that doesn't mean nothing. That doesn't mean anything what I'm saying, right? So we came up here, like I said yesterday, and we fell apart. And where did we close? In this chop suey zone, right? There's just moving averages, most trader prices of the week and the month and the year, the 200-day moving average, the 50-day moving averages, 100-day. It's just like littered with confluence of just all these big levels. It's just a mess. So it's hard to really go and be all out bearish or bullish on something. And let's look at what we're doing now. Okay. Now finally today we finally don't have a gap. Not that that bothers me or anything like that, but like every day it was almost like gapping up or gapping down. So let's look at what we're doing, right? Let's analyze this market. Now you can see the profile over the last week is very balanced. You can see, and that's why it's such a large volume area. This value area, this highlighted part is value area, which means 70% of the trade has happened in this area. So you can also say that's the chop zone. Okay, that's how you read that. So that's value area. That's a market profile, volume profile terminology. And that all that means is 70% of the trade has taken place in that area. That's all that means. That's why they call it the value area. And this is value area high and value area low. And in general sense of the terms, if you come up here, it's almost like if a car was selling at like 10 grand, right? In the upper end of the price, above 10 grand, let's say the median, let's say the most traded price of that vehicle was, let's say, 8 grand. So 8 grand here, 10 grand is value area high, and let's say 6 grand is value area low for the car, right? You wouldn't want to buy here. You're overpaying, right? You'd want to sell. So that's how you look at the value area. You'd want to sell. The most traded price is 8. However, right, if we come back down to value area low, that's a good deal, right? 6 grand. I'll buy that car. So that's how you look at value area. That's just telling you that here's the value zone. You know, if you buy above here, you're taking a shot, you're taking a chance. If you sell here, you're taking a shot at not the best prices. You're shorting in the hole. So you want to buy here, sell here. That doesn't always go for that. I'm just explaining the value area. I'm not telling you to trade like that, but that's how the value area. In this particular market, that applies because we're such in a balanced area that I believe that the trades are going to be right now. You fade the edges, you short at the tops, you go long at the bottom until we break. Okay. Again, hopefully that makes some sense. All right, let's look at the high of yesterday. We got at a high of 40.24. We had a low of 39.78. Where's price now? 39.92. Right here. Okay. Here's the overnight high. Here's the overnight low. Price is in the middle of this overnight. Look at the profile. Bell curve, very bell curvy, very balanced. Okay, very balanced. So this does not tell us anything. Nothing. It just means we're balancing. And actually, that's funny. Like literally, the most traded price of the 24-hour zone just moved here to 399. That just happened while I'm speaking. If you can see now, there's a line here. So we're in the middle of the muddle. This is chop suey. This is chop city. This is, you want to get tore up? Enter right now. Go long or short right now. You're gonna get chopped up. So this does not lead to great trades from here. All right, with the overnight high and overnight low. So what you want to do is, like I said, use the value area. Okay, this is where you come out into this. If we come down to here, remember, you have such many levels: 200-day moving average, 100-day moving average, right? So I'm just saying, if we come down here and we can't make new lows, well, you're gonna go long. You're gonna go long back into the middle. Same thing on the upside. Okay, this isn't gonna be super detailed today because there's not a lot of edge in this market right now, because we're just in the middle of the muddle. There's not much to tell to be like, okay, like overnight, we're 100% net long, 100% net short. We're not. It's not. There's not a lot of edge to it. So you got to make your edge, right? So on the upper end, we do have supply zone here. Okay, which coincides with the most traded price of the week on the RTH session. Now, could that act as resistance today? It could. It could. It could. I'm not saying it can't. Okay. So, like I said, 200-day moving average below. We have equal lows here. Okay, that could serve as a breakout point, but I would say in this current market, without a catalyst right now, we come down here. If we dip below it, come back right up and don't accept value below it, you got to go long. Okay, there's the long. Well, where's the short, right? So if we come and we go to overnight highs, which has a supply zone here, and also the most traded price of the week, that could be one. I'd really have to wait and see, do we move above this? Because there's another supply zone here, right? I'd say the better bet, I'll be honest with you, the only way you go here, you have to make a reverse and hold under here to get the short. Okay, that's the only way you short there. However, better play is probably let the market come up here to this supply zone and you close to yesterday's high. And remember, this is also the most traded price of the year. And we come down and you make a couple higher lows, a lower highs, then you could probably fade it back into maybe the development BPOC of the day, take some profit here at the most traded price. So the moral of the story is you basically want to fade the edges. Fade the edges means go long at the bottom, short at the top. Now, can we break out? Sure. Sure. There's not a lot of catalysts. Okay, so we could. Like right here's a good breakout point. But you'd have to see a big move down. And remember, we have the 100-day moving average. You have the supply. You have the demand zones here. So you'd have to like, take targets. That would be profit taking right there. But like, could we break this and hold it and go down? Sure. I don't think we're at that point yet, but sure. Same thing on the upside. Okay, we got the 9 daily average here in the daily EMA. 9 daily EMA right here. Coincided with yesterday's high. So you'd want to look for a break, retest, and probably then you can go long, maybe hit the supply zone up here. But I think the name of the game is range bound trade. Okay. Hopefully that makes sense to everybody. All right, let's look at the Qs. The NASDAQ. All right. NASDAQ hit supply zone yesterday and it sold off from the supply zone. Okay. And what do we have going here? We'll show the price of the weeks right here. Okay, that is 120,100, 12,100. All right. So that's where that is. We kind of bounced off the 200-day moving average in the futures again. That's acting as support. Okay. So that's what that looks like. Now let's look at what's going on now. So something to pay attention to today is Tesla. All right, I'll give you a little tidbit. When you're looking at Tesla, obviously it's the strongest, one of the strong stocks. Okay, it's in the discretionary sector. You want to see, if you want to get it like a little, I guess a tip, I'm gonna say, is if I want to go short, I gotta have Tesla starting to get weak. You gotta see that start to get weak in order for you to really get a nice trade. If you see Tesla ripping, and even if the market's a little weak, like I'm not really gonna probably want to go too short. I'm not gonna be confident in it. Okay, so price is right here, 120.96, right in the middle of the most traded price of the week and the most traded price of yesterday. Balance, Chop City. Okay, so not much edge there, not much to read. So pretty simple. What are we doing? I think everybody knows the story here. Come up into the supply zone again. Maybe go by the highs of yesterday, the 9 daily EMAs right here. Get some weakness, you're going to short back to here. Okay? Same on the long side. We come down here, you got the 200-day moving average. Do we go down to, there's yesterday's lows right at the 200-day moving average. Can we pop into this demand zone, 100, and then you got the most traded price of the rolling year right here. You probably could bounce out and you go long. NQ's got a lot of overhead supply, so it's a real tough road to go long. But can it happen? Of course it can happen. It's got a tough road though above it. It's got a lot of overhead supply. So even down here, demand zones. So that's what it's looking like. Not a lot of edge right now. You got to wait to the edges to play something. Okay. All right, let's go over something really quickly, and then I can get out of here. Get you guys looking at your trading. So let's look at this chart. I just want to go over really quickly. People who've been watching me for a while understand this, but for anybody who's new watching, this is just how the market works, and I love it using volume profile. Okay, and that's why I talk about the most traded price of the weeks, the months, the years. Okay, it's just easy to see. You don't see this with candlesticks very easily. Okay, now I'm going to show you why crude's breaking out. Okay, this is crude. Okay, but all I'm going to show you is why is crude breaking out. Well, it has news, but that's not even, that's the reason, but that doesn't mean it has to, that doesn't mean anything. That's just a catalyst. Well, check this out. Look at this node. That's a high volume node, right? Well, look at this. Just to give you a quick view, every blue profile, which is these, are weeklies. Every outline profile is monthlies. Okay, and then the white profile on the side is the profile for the current year. The big one is for a year ago, the rolling year. Okay, so this is where I get my levels, right? So right now, the most traded price of the current year and the last year is 79.10. That's a huge level. I believe this is headed for that level, and it's going to stop there. Now, the important part is not that, but that is an important part. You could tell where the market is going to go. However, this is the important part. Look at this month's most traded price, 76.33, right? You have that, right? Then you have last week's most traded price, 76.05. See how they're all stacking together? Look at this week's most traded price, 75.89. Hence the big node, right? So these all were the most transacted prices. And whenever that happens, it's a spring that coils, and look what's happening. You're breaking out. Because all people who transacted in here was the most contracts traded, shorts, longs. So you have the most shorts and longs at initiated positions here. So when that moves out, well, whoever was short is now getting squeezed. And that's just because that's how the market works. Right? That's why I love volume profile, market profile, because this is the most traded prices of the months in the last couple weeks right here. It's going to break out lower or higher. It just was what was going to happen. That's why I love looking at this stuff. You don't see it with candlesticks. Not like this, not so easily. Oh, wait a minute. Oh man, these are all lined up, right? It's just easy to see it, right? And then where are we going? 79.10, most traded price of this year and in the year ago. That's where we're going to be headed right here, right? We have this resistance right here, but that's where we're going to be headed. Okay, let's look at now. There's this resistance to deal with in crude. So I'm not saying just, but most likely if it breaks that, it's going to go here. All right, let's look at the ES, right? So you guys know what I'm talking about here. Look, most traded price of this year, right here. That is right there. This is what I'm talking about. We're in chop suey land. Okay, look, most traded price of this year, most traded price of the rolling year, the most traded price right here of this week, the most traded price of last week. You get my point? Look at this range. In here is just a lot of contracts traded. Okay? We're going to break out. It's just a matter of when. And again, where do we go? Very easy, right? I look at my chart and I go, okay, where's the node? And look above us, 41.2850. That was the most traded price of this month. Well, if we break out, we're probably going to go back there to the high side. To the low side, what's below us? Now, we have a low volume node, and I don't want to get too into details, but right here there's a low volume node, which means that there's support and resistance here from the past. It's like a pivot point, but sometimes those get blown right through. Doesn't mean it's gonna stop there, right? So, but really, you want to look for what large volume nodes are below us, right? So you have one here, you have one here, and you have one here. So those are most likely the first stop is going to be here, 3,900 around. Then here. Okay. Get the point, right? So let's just look at the NASDAQ finally and to say the same story, right? Most traded price of the year, this year, most traded price of this week, right? It's actually a couple weeks ago, most traded price. Here's the most traded price of the rolling year. That's probably where we go next if we go lower. That's 116.98. Very easy, right? And then look, if we break out to the upside, look at this most traded price. Look at that price. That's the most traded price of this month. But look at each week was the most traded price. Well, look at that node, right? So we're going to probably break out if we go higher, and we're going to go here. I'm going to stop there first. That's how it works. That's how easy it works like that. And it happens over and over again. Okay. All right. Well, crude just opened, so I'm going to go look at that. Hope everybody got something from what I'm saying. Keep in mind with the fund futures that I brought up in the beginning. Give me a comment, like, or subscribe. Of course, I have my trusty Twitter handle. Reach out to me, ask me questions, do whatever. Wish you guys good luck today. Stay green. And again, I've been doing some shorts, and I know shorts don't get you notifications. Shorts don't give you notifications. I know they don't. But you can go to my channel and just look at the shorts that I've been putting up. And if there's a market update where I would go to my channel, you'll get a notification, I will do that. But so just go to my channel, look at the shorts, and see what I've been putting up there. But just keep in mind what we're looking at here. Like I said, I'm leaning towards the downside, but that just means a lean. That doesn't mean anything in stone. Okay. Everybody have a good day, and hopefully maybe you'll hear from me again if there's some type of. But remember, right now there is zero edge where we're at in this market. Sit back, and wait. All right. Have a good day.